Hi, I'm Joel Weber, the editor of Bloomberg Businessweek. It's my sincere pleasure to speak with Adena Friedman, the CEO of Nasdaq today. Adena, welcome to the year ahead.
It's great to be here. Thanks, Joel.
We'd also love to hear from all of you. Please submit any questions you might have in the chat, and I'll do my best to field a few. And just a reminder to use the hashtag the year ahead on social media. Adena, so obviously we're going to talk about the year ahead, but I also just have to start with the market this week and Reddit's GameStop obsession. Where does this go from here, and how does Nasdaq handle moments of extreme volatility that have also prompted some of these trading halts?
Sure. Well, I think that that is one of the mechanisms we have, but generally speaking, we don't really comment on any particular listing, particularly those that aren't on our exchange. But I think that in general, if we look at some of the activity that's happening, I mean, it's clear that retail is trying to come together to effectuate a strategy in the market. I think we also have to recognize that there are a lot of rules that govern trading in the markets, and so it's important that all investors understand those rules as they come in and participate in the markets. In terms of the role that social media is clearly playing in driving certain behaviors, I think that's another new trend that we've been seeing, frankly, for a while. In fact, Businessweek wrote a big article about that a while ago. So what we've been doing within our market. It was a very good article. We actually been investing over the last few years to make sure that we are able to understand what's happening in social media as part of our surveillance operations. So we basically have some tools that track changes in chatter on social media. So if there's a significant increase in chatter on a particular company or a particular situation, then we actually can flag that and then compare that against the trading activity. And if we think that there's something unusual or even worse, nefarious going on, we can halt the stock, and then we will contact the company, make sure there's no news, then engage with the regulators to understand whether or not there's any behaviors that we think we need to investigate further. And that's one of the mechanisms we have as a self-regulatory organization and an exchange operator.
How else are you approaching just the challenge that comes with so much more retail investing, since that has been obviously the root of this phenomenon?
Yeah, and we can also say that that's really the year behind and the year ahead is going to, I think, have a lot of retail activity and a lot of retail participation in the markets. And while it's wonderful to see a whole new set of investors engaging in the markets, directly accessing them, I think it's also very important that they educate themselves and that the industry help educate them on both the risks and the opportunities that the markets present, particularly if they're trying to effectuate some more advanced strategies as a retail investor, as a novice investor. So those are the things that we're focused on: investor education, making sure that our markets are open and available, making sure that investors have instantaneous access to information as the rules provide, as well as instantaneous access to the markets. And if that's the case, then they can all participate on an equal basis and be a part of the markets.
So another topic I want to hit on here is IPOs, and there's been a ton, even so far in January for Nasdaq, 70 or so, I think. What's the outlook for not only traditional IPOs but also SPACs and direct listings?
Yeah, so what you're seeing today is a new choices being made available to companies as they're thinking about tapping the public markets. They can go public through a traditional IPO. They can be acquired through a special purpose acquisition vehicle, our company call it a SPAC. And that will then enter them into the public markets through that acquisition. Or they can go and do a direct listing, particularly if they're not looking to raise capital today. There are some new rules coming forward that may allow them to raise capital in the future, but I think right now it's really focused on those that are not looking to raise capital as they enter the public markets. And what's nice about that is you have a lot of choice. So companies have these new choices. I think it's also important that investors understand the differences. So an IPO has a lead underwriter who does a lot of diligence to make their underwriting decision, whereas with a SPAC, it's really your leaving it up to the management team of the SPAC to do their diligence on the company and to report all of the known risks and business opportunities in the SEC filing. And then investors actually have a chance to approve that combination, that acquisition. So they have a chance to vote on whether or not they think it's a good deal. So it's very important that the investors take that responsibility seriously as they're looking at what combination is being done. And then on the direct listings, it's a different way for investors to engage, where there isn't an underwritten offering the night before. It's an auction that really establishes price discovery for the company. So investors should understand what that means as they're participating in the markets.
I also want to talk about the sectors that you expect to be most active in, especially, Nasdaq being Nasdaq, such an emphasis on tech and biotech. What are you expecting in some of these new players that we have yet to see go public?
Well, I do think that continues to be a lot of activity in the tech sector in terms of really interesting private companies. We actually had 90 second tenders, which are kind of secondary trades in private companies, go through the Nasdaq private market last year, which is a record number of programs that we facilitated in the private market last year. And then we also, of course, see them starting to think about the public markets. And what's great is we've had a very active issuance cycle. We had 184 operating companies go public last year, and another about 120 SPACs go public. And that was all just on Nasdaq. So we're very pleased to see that companies are realizing that the public markets are a great way to get permanent access to capital and to provide for new benefits for their employees. I think that at the same time, you're seeing that it's in certain sectors in particular, which, tech sectors, the healthcare sector has been very active. Some of the consumer sectors, particularly tech-driven consumer sectors. So there's been a really interesting plethora, frankly, of companies tapping the public markets.
I also want to ask about board diversity, which has been something that Nasdaq has really prioritized of late, and it's been widely cheered by a number of people, diversity advocates, investors, even some politicians. It's also had a little bit of criticism. And I just want to ask, how did you approach developing those rules?
Yeah, sure. So just to give a little background on the proposal. So as a self-regulatory organization, we have the ability to establish listing rules that govern our market in terms of determining what are the gates that we would put in front of a company before they are able to access public investors through Nasdaq. And last year we decided to put forth a proposal that requires that the companies that are listed on Nasdaq disclose the composition of their board from a diversity perspective. And then we established some minimum standards where we're looking for the companies to try to reach over the next 4 years to have at least 2 diverse members on their board. But the only requirement for them is either to meet the standard or explain why not. So they can't get delisted for not meeting the standard, but they just need to explain to investors what they're doing. I think that in terms of the reaction, the investment community has been universally positive, and you've seen that in the comment letters with the SEC. And then a lot of corporates have also stepped up to say a lot of positive things. And when we've engaged with our clients, they're overwhelmingly positive. But we have some of our clients who we're engaging with to make sure they understand what it is, understand what it isn't. It's not a hard mandate. And then also to help them navigate through the change. But the fact is that we do think that it's an important element of thinking about governance in corporate America today, to establish the fact that diversity on boards creates diversity of thought. And there is an overwhelming number of research reports now that show that the correlation, at least, between more diverse boards, better financial performance, and better risk management. So we think that there's enough evidence today to say that this is the right standard for Nasdaq to establish.
A lot of companies, including ones that are listed on Nasdaq, don't meet those standards. So you mentioned how you're going to have those conversations with them. How will you help get them to meet the new rules?
Yeah, in fact, we've established a whole program that will be available to our listed companies as it's just a service to them as part of their listing, to help them identify diverse candidates that meet their requirements. So it's an important thing that every company should have a board that is well qualified in terms of hard skills, soft skills, and background. And so I think that we're very, very excited to work with our companies to help them identify qualified candidates that also happen to be diverse. And we will offer that as a service as part of being listed on Nasdaq. And we already see companies working with us on that, which is really encouraging.
So I have a question from the audience that's already come in. I just want to encourage everyone to continue to ask them. A viewer from Japan asked about cybersecurity on the exchanges. Adena, have you seen increased activity from bad actors?
Well, we do see, I would say, consistent attempts throughout, on a pretty regular basis to see whether or not that people can find vulnerabilities. And we have a very robust IT security program. We don't spend a whole lot of time giving a lot of details on that because obviously it's important for us to maintain security, but we do have a constant investment. We are always working with new providers as well as a very, very wonderful team of very qualified experts on that on IT security. But it is a constant activity for us, and it's something that we are consistently investing in to make sure that we secure the markets.
So let's talk for a second about the elephant in the room in general, which remains the pandemic, and it's raging not only in America but elsewhere around the world. And how does that link up with your economic outlook? Obviously, vaccinations will play a huge role in that, but when you look ahead for the rest of the year, what's the economic outlook that you're fostering at Nasdaq?
Yeah, such an important question, and it's one that doesn't have a certain answer. But I think that what we're seeing among investors, and as we talk to our companies and other clients, I think there's a lot of hope that the second half of the year looks very different than the first half of the year. It is important to see that all of the governments, including the U.S. government, are really stepping up to bring the vaccines to the populations, leveraging all of the available resources to do that. And I think you've seen more and more activities among governments taking a more active role, which I think is very important. But if we can try to get to the point where we have well-propagated vaccines by the end of the second quarter, I think that is probably in line with investor expectations so that we can start coming back together. We can enjoy the summer together. We can see our families again. We can go to dinner. We can go to the movies. I think that you're going to see that once it's really propagated, there's going to be just a flurry of activity and gatherings that people are so excited to be able to do again. So I think, travel and other things, it'll take a time to recover as people kind of come out of hibernation. But I am hopeful that it will catalyze the economy in the second half of the year.
So you mentioned the government, and obviously there's been a change in Washington, D.C., and there's also a change at SEC. I'm wondering just, what's your perspective on that as a CEO and someone who also talks to a lot of other CEOs?
Sure. Well, starting generally with the change of administration, I think that it'll be interesting to see how President Biden, where he focuses first. I think we all know that his first focus is going to be on the COVID recovery, fiscal stimulus, but his second focus is going to be an important thing for us to examine as well. And I'm hopeful that his second focus is going to be on infrastructure and, crossing the aisle to come up with an infrastructure bill that really puts money back to work for the economy, that actually makes our cities better cities, that focuses in on those areas of our infrastructure that really need to be modernized and improved, and puts a lot of people to work. So if we can see that as his second focus, I think that we will all find that both in terms of private and public sector, I think we'll all find that that's very, very productive for the economy. In terms of the SEC, which is the regulator that we tend to work with the most, I think Gary Gensler is a very qualified candidate. He's a market expert. He understands the benefits of the markets, but also the perils of them. He understands the ecosystem extremely well and the balance that needs to be struck in terms of regulation being, I would say, supporting business, but also making sure that it's overseeing the business of finance successfully. So we look forward to his expertise.
Just on the idea of you getting to interact with a lot of various CEOs, I'm wondering, in your conversations with them and everything else that you're seeing right now, what trends do you expect will linger and perhaps just become the norm after the pandemic finally fades?
Yeah, it's a great question. And I've been saying to my team for a while, I don't want to make permanent decisions in a temporary situation. But as we get closer to thinking about what is it going to be like when we all come back to work, and not everyone's going to want to get up and commute to the office every single day. And we obviously have technology available to us that does not make that a mandatory for every job. So I think that you're going to start to see a hybrid environment develop in office, out of office. I think you're also going to see more technology, particularly video technology, being deployed in the offices to make it so those out of office personnel feel more a part of the conversation. And there, I think that that's going to be a great investment because it gives employees more flexibility and it gives employers more flexibility to find employees that may not just happen to live in the city, right, that you operate in. And it could be a really great boom, but there's going to be a transition. Today, we are all out of the office and therefore we're all in little squares and they're all equal. When some of us come back in the office and some are out, how do you make sure everyone feels engaged? But also, how do you reintroduce the creativity that I think that we're all missing right now by not being able to hang out and talk casually and to, share ideas? And that's the part that I'm really excited about. But we have to find a way to create that right balance.
I have another question from the audience, which is, does Nasdaq envision setting up an exchanged or a unified market pricing vehicle for new digital asset classes, in particular things like cryptocurrencies?
So today we play a few different roles in the crypto world, but we are not an exchange operator ourselves in the crypto world. But we have created a crypto index with a partner, and we are launching an exchange traded product, not in the U.S. actually, outside the U.S. Associated with the crypto index, which we're pretty excited about. Also, in our Nordic exchanges, which operate in most of the Nordic countries, we actually have some exchange traded products listed on our exchange that have become quite active. As a technology provider to markets, we actually provide a lot of technology to the crypto markets in terms of trading technology and surveillance technology to make sure that they're monitoring their markets properly. And then then we step back and we say, should we be a market? And I think right now there are a lot of markets out there. It's that classic product life cycle, propagation of actors coming in and trying things and then seeing who really becomes the strongest. And I think right now, we didn't feel the need to be a leading actor there, but we certainly will evaluate the space over time. And we look forward to partnering with the exchanges that are there.
So here's a little bit of a meta question for you. You've been with Nasdaq for a while. Nasdaq actually turns 50 next month, right? 50th anniversary of Nasdaq.
That's right.
I'm wondering, yeah. How you're going to celebrate that, and then when you look at everything that's transpired over the last year, I'm really curious. What have you learned about markets in light of all that?
Well, first of all, it's amazing to think that I've been with Nasdaq for half of its history. So that's kind of a fun little fact. But yes, it is. It's also just incredible to think that we are 50 because we still feel like a really new company, and we're always bringing new technologies in and trying to disrupt ourselves. So it's a fun kind of way to look at us as being an established player, but we don't think of ourselves that way. In terms of the markets, though, the markets have evolved tremendously over the last 25 years, certainly since I've been here. And it is today, it's a very, very embedded part of the economy. It's a very, the way that we interact today and the electronification of the markets means that it's democratized, as we've been talking about from the first topic, in terms of having retail and professional investors coming in and working together or being a part of the markets together. And I think it's a very important part of the economy in any country to make sure that they understand the importance of markets in raising capital, providing investors an opportunity for returns, and really embedding themselves in the economic growth of the country.
And my last question for you, Adena, in the future, and hopefully for all of us, like it happens this year, but there will be a time where we're back in a new normal. And I'm wondering, what from this time and this experience, just on a personal level, do you hope to retain once we get back to that space?
Great question. One of the things I've actually really enjoyed is slowing down a little bit, particularly on the weekends. Not just racing around and having the weekend gone before it really even starts. My husband and I have really enjoyed our time together. He's actually an artist and he's a potter, so he's been teaching me how to make pottery. And it's very therapeutic. It's a complete opposite of what I do here. So I've really enjoyed that. So I'm really hoping that we continue to have our special time together and we don't just get kind of caught up in the mayhem in the future.